In this video, I will talk about how to trade options. That means it has the power to potentially earn much higher percentage profit. For example, maybe like 10 times or even up to 100 or 1,000 times higher profit using just much less money, maybe like 100 times less money. For example, Tesla price, the stock price is $440. So if you buy 100 shares of a Tesla, you need $44,000. And even though you can fully capture $20 increase, and then you will earn only just 4.5% of your total cost or investment. But if you trade option, and if you capture the good trend, uptrend or downtrend, if you purchase the exact same correct type of call option or put option, you may just earn maybe like 100% or even 1,500% based on what you have invested. And I will use the extreme example happened on last Friday. I bought around 50 cents and then it increased to about $4.5, almost increased 10 times, and or even from $30, and then if you only buy one contract, one by call option, one contract. That means it includes the 100 shares. And then if it can increase and in the correct uptrend position, and then the call option will increase, depends when it will expire. So when it's very close to the almost like expiration date, the time value will decrease a lot. And on Friday, it's almost, for example, I purchased the September 26th. Expiration date September 26, 2025. And then around that time, I know it will increase it will have the possibility to increase to this yellow trend line on this daily chart around 440. So around this blue trend line, so when it opened here and dropped down to here, and then it started to increase and then break and increased up to this opening price, and I expect it will break out and then it will increase up to this yellow trend line. So based on my interpretation of all these trend lines, so when it break out of this blue trend line, it has a high probability to reach to this yellow trend line. So from this price, start from around that time, the call option, for example, this call option is exactly started to take off, and then it increases from almost like 50 cents to about $5. So it increased to almost like 10 times. So you only need to spend $50 for one contract. That means one contract. If you buy one contract, the the call option value is 50 cents. Then multiply by 100. That's $50. And then when it increases to $5.25, and then it multiplied by 100, that becomes 500. So you spend the $50 and then you earn $500. So that's almost like earn 1,000%. So you earn much higher percentage profit. So let me explain um, how to do this in this kind of a simple way. So the trading platform, order bar, check this order bar. And then it opened this, for example, equity. That means you can buy stocks, different type of stocks or ETF. And if you check this option, and then this option, if you search this search bar, for example, right now it displayed Tesla. 250926C 435. That means Tesla C, that means a call option. That means if you buy call option, you expect it will increase the price. And if it happened to increase the price and increase it to your strike price, and then you will earn a lot of money. So this price after this C 435 is a strike price you select. And then this 250926 is the expiration date. That means 2025 09, that's September 26, that's September 26. So that's last Friday. So the past Friday, today is Sunday. So for example, if you use this search bar, if you type Tesla, and then you can choose many type of call option or put option. Right now, because this is already expired, so right now this call option is not exactly shown on this list. So I just show you different options. There's a different uh, buy call or buy put, or sell call or sell put. So if you buy call, that means you expect it to increase the price. And if it increase the price and also even increase to the strike price, and then you will earn a lot of money. But even though it will not increase to your strike price, depends on the status, market status. Even though it increased and also with a high momentum, and your strike price and your call option value will still increase. So, but it's when it increase, and then may it will fall down. So can still fluctuate. Depends on if it will increase to your strike price, or if it will approach the expiration date. So if you buy put, that means you expect stock price will start to decrease. And then if it decrease the stock price and even reach the strike price you select, and then your put option value will also increase a lot. So if we copy paste this into this window, and then the chart will display this option chart. For example, if I select a different strike price, if I selected 200 or 430, and then this chart will change it to call options with strike price of 430. So even if it's 430, that means it will increase to a much higher value, because the final price is much higher than your price of 430. So it's almost like increased from zero, because at that Friday, on Friday, all the call option or put option are approaching very low price, because it will expire on that day. So that means all the call option or put option will expire and will almost approach zero value. But at that time, if you capture the good trend, uptrend or downtrend, if you capture the trend incorrectly, and also selected the strike price correctly, then you will earn much more money. So for example, if you selected this call option with a 430 strike price, final price is 440. 440 is much higher than 430. So the price above your strike price, you will earn almost like a full $10. So, and for example, it will increase for almost like below $1, and increase to the final price around of $10 for this call option for each contract. So each contract price increased by $10, then the total money you earned will be $10 multiplied by 100 because each contract has 100 shares. You will earn $1,000 just for one contract. So you will earn $1,000 for each contract with a cost of just about maybe like $50 or like much less than $100. So if you buy two contracts or three contracts, if you buy three contracts of a call option for this contract, then you will earn $3,000 with just much less than $200. So you will earn 1,500% of a profit for just the very minimum of money you spend. And then you this way, simple way to trade this kind of option is also looks like trading the low price stock, because you see, you using all these trend lines, you see all this pattern, fluctuation pattern are very similar to the actual fluctuation pattern of this stock actual price, like $440 stock price. And all this kind of a fluctuation for this call option or put option are also follow the same pattern as I explained it, using this kind of trend lines. So basically all this kind of trend lines excludes all these kind of fluctuations of this call option or put option. And so that means if you know the relatively good support or potential support trend line or resistance trend line, so you will get a good idea about if this call option will increase or decrease the price. So for example, this is the trend lines, European stock prediction trend lines. So when this time frame is completed, all these kind of tips of these trend lines are the predicted potential high and low for this kind of call option or put option. And then, for example, if I don't enable this trend lines, if I disable this trend line, then you will not see any type of this prediction of a potential high or potential low. All these are just a fluctuation of the actual call option or stock put option, or maybe just the actual fluctuation of the stock price. And maybe even though you use the candlestick, this is the OHLC bar chart. So even though if you change this to candlestick, change it to candlestick, and even though you can use this kind of a green or red and try to guess, it will have an uptrend or downtrend. But during when it fluctuates, during that process, and this kind of a color will change uh, with time. So sometimes it will becomes green and then it will becomes red, or sometimes when it increase and then it decrease. So it's always fluctuate up and down, up and down. So you don't really know how low it will drop or how high it will increase, and then it will stop there and have a price reversal. If you don't have those kind of high low uh, effective support and effective resistance trend line, so it's very hard to understand how high and how low it will go and when it will have a flow reversal. But if you enable that type of European stock prediction trend lines, and then you will enable this, and then you will predict this trend lines, you will show all these kind of trend lines. So basically when it dropped to this support line, so it will have a high probability to have a price reversal. So you see this when it drops to this, and then it started to decrease. And when it dropped to here, to this support line, it has a high probability to increase because that day it opened high. So when it drops to this support line, it still have a very good high probability to increase, to have a price reversal, and then increase the up even to this top resistance dot. So when it increases to this purple dot, it's a high price, and typically it will have a price reversal, and then it dropped down to this open price again, closed there. So anyway, this is a good and a simple way to show all these options. So basically, you can copy this type of options, and you can change the strike price or change the expiration date very easily, and then all the chart will goes to this. For